had mentioned this earlier when I was talking about the stock in trade. Correct? I had mentioned that, please pay attention, that if the assets are held as stock in trade, it is removed from the definition of capital asset, and therefore when you sell that asset, stock in trade, it will not give rise to capital gains, but it will obviously give rise to your business income. So concept of capital gains or business income, the question whether it is a capital gains or whether it is business income is extremely important, and I am confident that a large majority of the common the audience would never even bother about this or would not be aware about this, but it is extremely important, and therefore let's look at it. Surplus on the sale of shares which are treated as capital asset will be taxed under capital gains, whereas those which are, as I said, which is a stock in trade, if there is a surplus when you sell it, it will be taxed under the head profits and gains of business or profession. Now, why is that relevant? What is the difference between the two? And as a common man, how are you concerned with it? Let's go back to the earlier slide where I talked about listed shares. Yeah, you have lots of shares, all listed, you sell them, all are long term, you made a profit of 1 crore, you are not going to pay tax because you are saying it is my capital asset, it is long term capital asset, it is listed share, STT is paid, and therefore it is exempt under section 10 subsection 38. So if it is long term, it is exempt. On the other hand, if it was short term, less than 12 months, I mean not more than 12 months, the tax rate is only 15%. Correct? That is the concessional tax rate available. But let's look at the other side. Instead of capital asset, if you were to say that no, I am a speculator, I keep on buying, I keep on trading in shares. In fact, 99% of the common man who buys and sells shares, when he is talking about, even on public domain, when questions are asked, they ask, I am trading in shares, so can I treat it as exempt if it is long term? If you are trading in shares, you had it, because it will be treated as business. If it is business, then the tax concessions are not available because the concessions are for capital gains and not for business. Exemptions under 54 EC, 54 is not applicable, but 54 EC and F are not available because that is available only for long-term capital gains. So let us take an example. You have shares, you have held them for 20-30 years, okay, and you sell them today, but they are part of your business. You have been buying and selling shares over the years, but some shares you have kept for many years, but they are part of your stock in trade, and you make a huge profit of 10 crores. All these years you never bothered what difference it makes whether it is business or capital. I am holding it for long term, but when you sell it, you have neither the benefit of the exemption of long term capital gains, nor do you have the benefit of saving tax by putting in a house property or buying 54 EC bonds. That business income will be included in your normal income, and whatever, if you are in 30% slab, you pay 30%, if you are in 20% slab, you pay 20%. So that is the relevance of business income versus capital gains. In case of business, deductions can be claimed. So if you are doing, forget shares, if you are doing any normal business, anyone is a businessman here, you will have expenses of the business, rent, electricity, salary, this, that, whatever. So if you have a business, instead of capital gains, yes, you can claim certain deductions which are incurred by you for the business. In case of capital gains, on the other hand, only, as we saw earlier, only cost of acquisition or index cost of acquisition or cost of improvement can be claimed, nothing else can be claimed. In case of business income, you can, after calculating everything, you can still have chapter 6A deduction, meaning 80C, 80D for mediclaim, 80G for donations, etc. In case of capital gains, you do not have that, you cannot. So for example, if you have only short-term capital gains, for example, no other income, 5 lakhs of short-term capital gains, and you have put 1,50,000 in your PPF, don't think that your income will become 3.5 lakhs. Your income will remain 5 lakhs, and you will have to pay short-term capital gains tax of 15% on that 5 lakhs, subject to that threshold limit of 2 lakhs. But that 1,50,000 under 80C is not available in case of capital gains. So these are the differences, very, very important differences between capital gains and business income. And so therefore now let's look at when can somebody say that you are not having a capital gain, but you are having a business income. So it is common sense, therefore, that look at it from the ITO's perspective for 2 minutes. I am a taxpayer. I have claimed 10 crores as exempt income because I say that it is my long-term capital gain. Yeah. Obviously, if you are the ITO and your bonus, your increment, your career depends on how much tax you collect, naturally you will try to find faults with my stand, and you will therefore say that, boss, you are not an investor, you are a trader. The moment you take that stand as an ITO, my 10 crore of capital gain suddenly becomes 10 crore of business income, and I have then the problem. So what are the criteria? Under what circumstances can the ITO take such a stand? I'm presuming that as a taxpayer we will never take that stand. Obviously we would want the exemption, so we will always say it is capital gain. So generally it will only be the tax department who will try to take that stand. One of the most important criteria to be applied is the intention of the taxpayer. Now this is very dicey thing, but this is considered as the most important sort of criteria for judging whether somebody is a trader or somebody is an investor. What is my intention when I buy the asset? Where the purchase has been made with the sole intention of resale at a profit, and the purchaser does not have any intention of holding the property for a long time, the presence of this kind of an intention will give rise to a strong suspicion that that person is engaged in the business of buying and selling that particular asset and is not an investor. But if you have invested in, say, securities for the sole purpose of earning dividends, I don't know who does that today, but presuming that is the intention, that I have no other income and I don't want to put my money in FDs because I feel that there is hardly any return. I feel that by putting in shares, but the dividend income will be very high, and I have invested primarily for dividend income, for earning dividend or interest over the years, then that intention behind investing is earning dividends, and therefore that intention can be taken as a ground to say that I am an investor and not a trader. Now, in case of stockbrokers, any purchase and sale of securities shall be treated as a business income. I mean, generally, unless there are certain other circumstances to prove that the treatment to warrant other treatment, like intention to hold it for generating regular income in future. So for example, let us take Tribhuvandas Bhimji Jhaveri, jewelers, the biggest jewelers, or Popley and Sons, etc. They are in the business of jewelry. They are buying and selling jewelry. So when they sell jewelry and make profit, that will be treated as business because they are holding it as stock in trade. But that does not mean that the wife of Mr. Jhaveri does not have her own jewelry. That her jewelry can't be said that it is part of stock in trade. The intention when she or her husband or father or whoever, when they bought that jewelry for own use, the intention was not to sell and make a profit, but intention was to hold. That intention, so what I'm trying to say is that a person can be a trader as well as an investor simultaneously. So you can have two parts of a portfolio, one being business, the other being investor. So that's why I give the example of the jeweler. Similarly, builders. A builder will have a huge stock in trade inventory of flats for sale. But does that mean that his own house is also part of stock in trade? Certainly not. That's his investment. That's his capital asset. So the intention of the buyer is extremely important.